When it comes to selling a business, most founders obsess over top-line revenue, but buyers are looking at much more than just the numbers. There are hidden drivers of enterprise value that can dramatically change an exit price, and they're often overlooked until it's too late. In this episode, we dig into those invisible levers that can make or break a deal. And to dive into the details, we'll be chatting with Mark Osborne, the founder of Modern Revenue Strategies. Mark has more than 25 years of experience delivering hundreds of millions of dollars of revenue for B2B SaaS, tech, and professional services firms, leading to successful acquisitions and exits. He's also a best-selling author and host of the B2B Growth Blueprint Podcast. Let's get to it. Thanks for joining us today, Mark.
Thanks for having me, Alex. I'm excited about our conversation.
We've given you a formal introduction. Now for something a bit less formal. What's something that might surprise people about you?
Well, when I got started in marketing, I actually was playing in and managing bands. And the early days of the internet, people probably don't remember this, but you didn't have access to the internet all the time in your pocket like you do today. And instead, people treated it like a billboard at like your local grocery store, where they would post a flyer and you would like take their email address instead of taking their phone number, and then sort of follow up with them on stuff. And so I noticed that people would post a post like, I have a recording of the Dave Matthews Band, another South African for you there, a recording of the Dave Matthews Band playing in Birmingham. So I now know that you live somewhere near Birmingham and you like the Dave Matthews Band. So when one of my bands that sounded like the Dave Matthews Band went to Birmingham, I would email all of those folks, because I would just collect all of their email addresses from these billboards. Because there was no such thing as spam. They wanted you to know how to get in touch with them. So their username was their email address. So I'd email all these folks, and I was selling out little concerts for unknown artists while I was still in college, and that really led to a job at a record label doing digital marketing, which led to a job at a radio station, which led to a more traditional sort of sales career in radio before I went back and got my MBA. But I was really lucky that I had the chance to work with some great brands like John Mayer, that folks might know, or the Zach Brown Band, and some of the folks in there. I got to share the stage with them, as well as promote some shared shows. So I had a lot of fun and really enjoyed that time. But the radio space was very slow to adapt to new technology. And it was that technology that had gotten me so excited about marketing to begin with. And so I left radio. I was running a top 10 station in a top 10 market, and actually went to a tiny little digital agency where I started to really develop that expertise with digital media, which I then used as I moved into analytics when I got my MBA, and then had the chance to work with some of the world's best brands, from Nike to Hulu to General Motors and Hyundai and others. And now I'm taking some of that expertise that I've built all over those years, and using that with smaller businesses as they're growing and scaling.
That is really cool. Really doing some name dropping there. Yeah, it's such a
You
cool
said make
fact.
it interesting, so I thought your
Oh
audience
yeah, no,
would
of
find it
course.
interesting.
But also really great that you're taking the skills that you've learned from working with these big names and these big brands and helping smaller businesses.
Yeah.
Maybe to dive into our topic for today, then, can you maybe start by breaking down what most CEOs miss when they focus only on top line revenue when they're preparing for an exit?
Yeah, absolutely. So it, in that, 25 plus year career that I've been through, and had the experience of, getting an MBA and working with some best brands, all of the sort of traditional literature and all of the, line of thinking is based on the premise that you're going to run this business forever. And so you make strategic investments, which actually start in the red, because you have to spend a lot of time, energy, and effort doing some research on your customers and the competitive landscape, and then doing some deep thinking about your company to come up with a strategy. And then you start to test how you bring that strategy to market with different media. And all of that sort of learning and testing is a negative ROI. But that's okay because eventually it's going to turn positive, and it's going to have really great results. But it might take 7 to 10 years for you to get the full payoff of your investment in some of those strategic things. A business that's thinking about selling within 5 years, might be within a year. It's not a smart investment for them to spend time on all that strategy if they're not going to be able to reap the full rewards of it. And very often, businesses that are preparing for sale actually do have a strategy, and it is working, and it could probably be improved. They could probably upgrade their logo, or refresh their website, or do some things that feel a little bit sexier, and maybe that's what they want to do. And in fact, that's almost definitely what most marketers that they will talk to would tell them they should do, because that's what we've all been trained. Start with strategy, and then the positioning that comes from that, and then the outward manifestations of that positioning are your logo and your website. But if you're actually thinking about selling in the near term, that's not the right way to go. Instead, by starting with process. So let's document all of your processes, because chances are today you've got some gaps in your documentation. Let's document your sales process. What happens when it goes from a lead, to a sale, to actually a renewal and expansion? Like, document all of that process. Let's get better at asking for renewals and referrals and expansion with our existing clients. Let's document the process that we use for attracting prospects and driving leads. Just documenting all those processes protects the value that you've already built in your business. It de-risks the sale for the buyer, makes it a lot easier for a potential buyer of the business to see how they could step in and operate that business. And so that's the most important thing that you need to do when you're thinking about selling your business, is protect the value you've already created, de-risk the sale for the buyer, so that you can attract more buyers to the opportunity. Then we start to look at, again, improving processes again by not just documenting, but up-leveling them, making them best-in-class processes, so that you can really maximize the multiple against your revenues that you're getting. All the while that you're improving processes, that means that you're getting more efficient and more effective at how you do all of these things, which means that more of that top line revenue is actually dropping down to that bottom line EBITDA, which then does a better job of driving what your sale price is. Also, it maximizes the multiple because it makes it easier for a buyer to see that not only do you have everything documented, but now you've taken the effort to make it best in class. You'll be at the upper end of the multiples for your industry. And so that's the most important thing for companies thinking about selling to do, which is very different than that strategic approach that you would take if you were going to run the business, in perpetuity. The other benefit of taking that approach first is, now that you've dropped more dollars down to your bottom line and EBITDA through improving processes, that can help fund some of these strategic investments. And not only that, but when you're spending the time documenting processes and improving processes, you're actually doing a lot of the mental work of thinking through, what is it that really makes our strategic positioning special? What is it that's really working in our sales process? What is it that our customers really do love about us from these testimonials and referrals? And all of that makes the strategic work move that much faster from a negative ROI into a positive ROI, so that you can take on those strategic initiatives if you are still running your business. If you haven't sold after, you know, 6 or 12 months of improving processes, and you're making those strategic investments, you can fund the strategic investments with the improved margins that you build from improving those processes, and you'll get the results faster from taking that time.
Oh, fantastic. So really getting those processes in place means that you are much more likely to attract buyers, but also if you don't sell within that time frame, you're actually building a more successful business. So it's positive either way.
That's absolutely right. That's absolutely right. And, there's a statement that running your business as if it's ready to sell is actually just a really good way to run your business. And whether you're thinking about selling in, 5 months or 5 years or in 15 or 50 years. And so taking the time to do those things really improves it and gives you the time to make those strategic investments that have that really high ROI later.
Amazing. You talk a lot about invisible levers. What exactly do you mean by this term? And can you give us a real world example of an invisible lever that made a significant impact on a company's valuation?
Sure. So, I mean, some of those invisible levers are sort of like the intangible capitals. And if you look at certainly the US stock market, the S&P 500, more than 80% of the value of those companies is tied to intangible capital. And that intangible capital is things like their structural capital, all of the systems and processes that they've built, their customer capital, that customer base that they have, and the relationships they have with those customers, their people capital, their sort of internal culture, as well as the leadership team that they have, as well as social capital, which also incorporates sort of that brand and culture and just sort of social reputation. Those four intangibles or kind of invisible levers are what drive 80% or more of the value of S&P 500. Now, it's a little bit different for smaller businesses. Smaller businesses are held a little bit more closely to what's your actual revenues or EBITDA, and part of that valuation, and what's the value of your assets on hand, and some of those things. However, uh, there's a range of what, the ultimately the sale price of a business is, either your revenue or EBITDA times some multiple. And there's a range for what that multiple is. And if you want to be at the high end of that range for your particular industry, for businesses of your size in that industry, the key is by turning those invisible or those intangible levers. And that's why processes is one of the easiest ways to do that, by improving that structural capital. But there's a lot of opportunity to also look at sort of customer capital. Customer concentration is one of the biggest things that scares off potential buyers. And customer concentration is where your whole business is highly dependent on one or two, maybe three customers. Well, if one of those were to leave, that future buyer is terrified that that would take the whole business under. And so by understanding that and then adapting to that by either helping to grow your mid-tier customers so that your top ones don't make up as high a percentage, or by doing a better job of building contracts in such a way that those higher percentage customers are built into more long-term partnerships, you start to de-risk that for that potential buyer, which again improves the multiple that you can command for your business. And the same is true on sort of the people, whereas you build out, sort of leaders within the organization, so that's not highly dependent on you as the owner to run it, as well as the social capital as you build your brand reputation and some of those strategic investments we talked about earlier. Those are really those kind of invisible or intangible leverage you can turn to maximize the value of your business.
Yeah, I think really important and something that a lot of people can overlook. I guess that's why you have called them invisible levers, but that intangible capital.
Yeah.
Moving on to sort of marketing and sales as value creators within your business. You've said that weak leads can really hurt your business. How does fixing your sales and marketing affect the value of a company when it's sold?
Yeah, absolutely. So you called it out, and so I'll give a free offer to your audience. So I published this book a few years ago called "Are Your Leads Killing Your Business?" And anyone that wants a copy can go to modernrevenuestrategies.com/free download. The whole book is there, as well as all the templates and calculators, everything you need to start installing this in your business. And what we have seen from working with companies over the years is that many businesses are obsessed with, I just need more leads, more leads, more leads, more leads. And that volume then distracts them from the highest quality of leads. And they sort of distribute their resources against all of the leads equally. Each one of them gets the same attention, but they should really be doing a better job of attracting the right leads and then focusing their most of their resources on those customers that have the potential to be their highest revenue generating customers. Because if they're not doing that, their competitors are, and their competitors are then taking those deals out of the marketplace. And what we see happen is that it creates a death spiral. These leads really can kill your business, because if instead of identifying the 10% of really good opportunities in your pipeline, you focus on, all 100% of them equally, well, your competitors will take out those good ones because they are identifying those best. And now you're left with the scraps. And those scraps are really deadly for you, because those are the customers that don't really believe in the value that you're creating. So they're going to whittle you down on price to where you have no margin, so you can't reinvest in your product. So that pulls you further behind the marketplace. Because they don't understand the value that you're creating, they'll also likely ask you to customize either your product or your service or something specific to them, because they don't really believe in your vision. Well, you know what the market wants. That's what you're trying to create, but they're pulling you away from that. So that pulls you even further behind your competition. And then lastly, because they never believed in the value, and because they asked you to deliver it in a way that you knew wasn't the optimal way to deliver this, they wind up churning out before they ever provide advocacy or testimonial or expand or provide referrals, any of those things. And so as a result, they wind up burning you out for no sort of long-term benefit. And you really just can't dominate your market category without some of the viral boost that comes from that endorsement and that evangelism in the market. So if all of the leads that you're bringing into your business, all of the deals that you're closing wind up falling into that category of killer clients, that really kills your business. And so often we see companies where, you know, they're doing very similar things to what they've always done, but their profits are going down and down and down. And it's because they haven't done a good job of focusing their resources on those opportunities that have the potential to be the best for them. And as a result, they keep winning deals. They're just the wrong deals, and the ones that wind up killing their business.
I think that's a really important thing to raise. It's the argument of quantity versus quality.
That's
And I
right.
think, yeah, a lot of the time people think, oh, well, I've made the sale. This has got to be positive. A sale's a sale. But
Right.
if you have one of those killer customers, as you said, you could be missing out on customers who will really value what you have to offer. So on that
Absolutely.
note, I was wondering, do you have any tips on how to find the customers that really are the right customers for your business so that you aren't wasting time on these killer customers?
Yeah, absolutely. It starts by, there's an old phrase, if you don't know where you're going, you'll never know when you get there. So you have to start by really defining, what does an ideal customer look like? And in B2B, we typically do that through a couple different lenses. The first is by really defining the type of company that you like to work with. And the second is really defining the sort of personas or avatars of those decision makers, champions, and end users that wind up being really happy with your business. And too often, what we see people do is they sort of like, well, anyone with a checkbook will be happy to work with them. But by really getting more precise on your niche, you do a better job of customizing your delivery to match a specific use case and a specific need that customers have. And by doing that, you start to create a moat and a wall that no one else can, sort of really adapt to, because you know one particular customer better than anyone else does, and you've adapted your solution to that customer better than anyone else. The other thing that I see people do is they focus only on sort of descriptive firmographics or demographics, like, well, we work with businesses in this industry, in this geography, of this size. They're trying to solve this problem generally. But what I see oftentimes is that you will see the different solution providers, or technology providers, or whatever your service is in the B2B space. You'll find that you resonate with folks that are operating within a different specific context. And I can use an example. A uh, a customer relationship management, or CRM system, something that most companies have of some kind. And there are lots of options when it comes to CRMs. And we see that folks that provide certain CRMs are great for companies that are in growth mode, because they're trying to do a better job of wrangling all of their different customers, and certain CRMs are just sort of better at that aspect of it. Other CRMs are better for companies that are in sort of a contraction. Their industry is shrinking because those CRMs help them do a better job of being more efficient and how they connect with those folks, and doing a better job of sort of following up and upselling and asking for renewals and referrals. Both companies offer CRMs, but by identifying our CRM actually works better for companies in growth mode, and then adapting all of their marketing and sales materials to speak to those companies in growth mode, and then identifying when a company comes to them saying, we're interested in a CRM, asking the questions that reveal, is it because you're in growth mode or is it because you're in contraction, allows them to focus their efforts on where they're likely to win and those customers that are likely to become their best customers.
Yeah, I think all really helpful tips for people to think about in terms of finding their ideal customer and not wasting resources chasing customers that are not going to suit their business.
Yeah.
If we think about processes a bit again, what role do sales processes and marketing metrics play in the due diligence process during mergers and acquisitions? What do acquirers really look at in terms of these processes?
Yeah, that's a great question. And what we find is that as part of doing their due diligence, there's a financial component that is pretty tried and true, and has some sort of standard things that people look at around not only what is your revenues, looking at all those add backs or things that maybe you've been a little bit creative to minimize your tax exposure over the years, really cleaning all of that up to make that easy to see for that potential buyer. But then there's also sort of the quality of those revenues, which gets into these things like customer concentration. How dependent are you on long-term customers? Then it gets into the quality of your relationship with the customers that you have. Do you actually have contracts in place, or is it just a handshake? Do those contracts extend into the future, or are they sort of one thing at a time? That ability to turn sort of opportunistic or event-driven revenue into continuous revenue, or at least reoccurring, if not recurring, where you have a regular cycle. Those things do a really good job of improving and pushing you to the upper end of the multiple from those marketing and sales metrics that you can impact. And then the next thing that we see that's really important is just having a well-documented process. And a well-documented process goes beyond just it's written down, but that's a start. So it goes to, here's what we do, here's the metric that doing that improves, here's our baseline for that metric. So if it falls below that, you're doing poorly. And if it's above that, you're doing well. Here's how each of those metrics relates to the ultimate outcome we care about, which is revenue and EBITDA. And then going beyond all of that documentation to visualize it, because something like 60% of people are primarily visual in the way that they interpret the world. And so if you've just written down your processes, you're missing the about 60% of folks that would be able to contribute and understand and improve that process a lot better if it was just visualized in a way that everyone could see it and engage on it. And we also see that by making that step to visualize it and put it out somewhere that people can look at it, it does a really good job of shaping the collaboration. Because if it's my process and I'm just describing it to you verbally, well, for you to help critique it and improve it, you sort of picking holes in my process. If I write it down, that's a step further. And now we can start to collaborate on the company's process because it's written down. So that's a little less confrontational. But when you put it up on the wall, there's something really magical that happens, whether it's on a screen or whatever, where people can really get shoulder to shoulder. and co-create and collaborate on how to improve these processes in a way that really removes a lot of sort of ego barriers and other interpersonal conflicts that come from me just describing it to you, and even just from us reading what I've written down to what's up on the wall. Really creates that really powerful collaborative environment.
Yeah, that makes a lot of sense. You see, at Sift Analytics, we're all about visualizations as well. And this is something that we've noticed that a lot of people who maybe struggle to understand seeing their financials, um, for example, in a spreadsheet, they will understand much better if they can see it in a graph, if they can see it in some kind of visual format. And I do agree, yeah, it's a lot easier to work with other people, to collaborate when you're looking at these visualizations. I personally also find visualizations quite helpful, um, especially to understand trends and things that you might not always pick up on unless you're a very numerical kind of person.
That's right. That's right. And not everyone is.
Yeah. Pictures worth of a thousand words, as that quote.
That's what they say. That's what they say.
But I think it's really true, and we're living in a very visual age. So a last question on this topic then. How can a company demonstrate that its revenue growth is not only strong, but repeatable and scalable? I guess we've already covered having the processes in place, and you can see that these are processes that the new owner would be able to adopt and continue in the future. What would you say in terms of scalable?
Yeah. So some of that's, sort of scalability comes from your ability to demonstrate not only that you have the processes to take a lead, from beginning to end, but that again, you can attract the right prospects out of the marketplace and then identify those right prospects out of the marketplace. And then you have to spend a little bit of, time, energy, money, resources on the market research it takes to show, and this is how many of those exist in the world, so that you can start to really define that total addressable market and then your serviceable market, that is actually the ones that you have the right to win with. Demonstrating that, and that you are really sort of the master of your marketplace by knowing all of that, and then showing that you have the processes to capitalize on it. That's the real key.
Fantastic. We have a little tradition on the podcast where we end with some rapid fire questions. So,
Okay.
your way. What's one piece of software that you can't live without?
ChatGPT is the highest paid employee I've ever had, or the highest ROI employee I've ever had. I definitely have come to rely on that a lot.
ChatGPT is great. What's the best book you've read recently, or the best podcast you've listened to?
So I am currently in the process of reading The Science of Scaling, and it's got some really great insights in there, and I would definitely recommend that to folks.
Fantastic. And then, what trends in the B2B marketing and sales arena do you think will have the biggest impact on enterprise value in the next 5 years?
Wow, that's a big one. Um, it's got to be your ability to build the processes and systems so that you can then layer in the tools like AI and automation. And what I have seen so often is that companies fail to be able to take advantage of technology innovations because they don't think about creating the systems and processes, capturing the data and structuring the data in a way that they can then take advantage of the technology innovation and solutions. And AI and automation are going to be no different for that. And there's absolutely a revolution happening in that space right now. And only the companies that have taken the time to build those systems and processes will be able to take advantage of it.
Yeah, it's all coming back to having the right systems and processes in place.
That's right. That's right.
And on that note, if there was just one key takeaway that anyone listening to this or watching this took home with them today, what would you want that to be?
Systems set you free.
It's good. A nice bite-sized takeaway. Systems set you free.
That's
Thank you
right.
so
Well,
much.
because they're not restrictive. They actually lay a groundwork that you can build off of. And that's how they really enable you to accomplish a lot more.
Yeah, I think for some people that might be a kind of counterintuitive message because I think a lot of people, maybe especially in small businesses that are sort of starting out, might think, oh, these systems are going to slow me down. I associate them with a
Right.
big corporate that's, got all this red tape. But actually, you need to have some kind of system in place that's repeatable and that will also help you to scale.
That's absolutely right.
Thanks so much, Mark. And thank you very much for the mentioning of your free book that's available. I will add a link to the bottom of this podcast episode so that all our listeners can go and download their free copy.
Fantastic.
Oh, thank you for joining today. And thank you to everybody who has been listening.
Thank you so much, Alexandra.
Thanks for tuning in to the Beyond Insights podcast. Please like and subscribe on whatever platform you're listening to right now. And please share with any of your colleagues or friends or family members that you think might benefit from listening to this podcast. That's all from us. Until next time, see you then.